Welcome back, everyone. Patrick here, moving on to the next example. And this example, as usual, it's in the lecture notes. You could print them out at the beginning of the section. You don't have to write all of this out. So at the beginning of the year, a business had assets of $900,000 and liabilities of $540,000. During the year, the business paid dividends of $120,000, had costs of $850,000, made sales of $1,200,000, and the assets increased by $140,000. What are the total liabilities at the end of the year? So as usual, we're doing financial statement algebra here. I'm going to draw out the flow diagram that we've gone over previously in the video. So we're going to have the beginning balance sheet, which is assets equals liabilities plus equity. And that's going to be broken down into capital plus retained earnings. And then we're going to have a change in assets, which is going to be a change in liabilities plus a change in equity. And that's going to be broken down into change in capital plus change in retained earnings. And then after the changes in the balance sheet during the period, we're going to end up with an ending balance sheet, which is assets equals liabilities plus equity. And then the equity is going to be broken down into ending capital and then ending retained earnings. We're going to add those. And then that change in retained earnings, that's a separate calculation on the side here. It's net income minus dividends. And then the net income is broken down into revenue minus expenses. So now that we got the flow diagram, we could just fill everything in. So at the beginning of the year, a business had assets of $900,000. So that's going to be over here, the beginning balance sheet. $900,000 and liabilities of $540,000. So that's over here. During the year, the business paid dividends of $120,000. That's going to be, let's write it at the top over here. They had costs of $850,000. That's another word for expenses. So that's going to be over here. And then they made sales of $1.2 million, $1,200,000, which sales is the same as revenue. So you got to be careful in these questions. They may use different words as well. You got to adjust accordingly. And then we're also told the assets increased by $140,000. So where would that go? The assets increased by $140,000. That's a change in assets, which is happening during the year, like that. And that's all the information that we're given. And they're asking, what are the total liabilities at the end of the year? So what are they asking for? They're asking for this over here. So given all of this information on the flow diagram, we have to somehow use it in order to get this ending liabilities here, that figure. That's what we're trying to get to. Now, there's actually multiple ways to do this. I'm going to show you different ways you can do it. The first way is I'm actually going to work with this information first. And this is the change in retained earnings. That's this portion. Notice we have enough information to figure out what that change in retained earnings is. So 1.2 million minus 850,000, that's going to give us 350,000, which is the net income or the profit during the year. And then the net income minus the dividends, that's going to give us the change in retained earnings, which is going to be 230,000 when we subtract these. And then this 230,000, that's the change in retained earnings that flows onto here. Right, so we got a little bit more detail here. Now what we can do is we can actually, with these two numbers, we can figure out what's the ending assets, because we have beginning assets of 900,000 and then they increase by 140,000, which means that this ending assets has to be 1,040,000, right? 900,000 plus 140,000 gives us 1,040,000. So that's the ending assets. And notice that we can also figure out what the ending equity is, because from here we can subtract these and get the beginning equity, which is 360,000, right? Because we have 900,000, 900K equals 540K plus a variable X, which is this equity. And if we isolate for this X, if we bring the 540 over, 900 minus 540 gives us 360. Now, notice that in the question, we're not given information about how this beginning equity is further split up into capital and retained earnings. But that's okay, because what we can do is we can take this beginning equity, we could take this change in equity, we're going to have to figure that out, and then we can add those and just get this ending equity. We don't really need the capital and retained earnings in this question, because once we have this ending equity, we could just take assets minus that ending equity to get that ending liabilities. So we have the beginning equity. This stuff we're not given. Now notice that we're not given the capital, we're not given a change in capital, and so we're assuming that that's just staying constant the whole time, but we are given a change in retained earnings, or we weren't given it, we figured it out over here. And because we're not given a change in capital, we assume that it's 0. And so this plus this means that the change in total equity is going to be 230,000. Right? If there's no change in capital and there is a change in retained earnings, and both of them added up give us the change in that total equity account, then because the change in capital is 0, then the change in equity is the same as the change in retained earnings. This just flows up to here. And then we have our beginning equity plus our change in equity, which is an increase of 230,000. And then when we add these up, that would give us what, 590 for the ending equity. And notice that we can't figure out what the ending capital and the ending retained earnings is, because we don't know what the beginning capital and beginning retained earnings is. We know what the change in retained earnings is, but we don't know what the beginning amount is, so we can't get the ending. And then the capital, we're not given any information about that, so we can't get that either. But we don't need those, we just need that total equity figure right there. Now that we have that, we can use this equation. So we got 1,040,000 equals liabilities, which is what we're solving for. We could put a variable X there, plus the 590. And so when we bring this over, that would become a minus. So the X would equal 1,040,000 minus 590,000, which would give us 450,000. And that ends up being the final answer. We got the 450,000. That's what the total liabilities at the end of the year are. So that's how we use the flow diagram to come up with that value. So we kind of went here, and then we just subtracted these. However, another way you can do this is notice that we were given the beginning liabilities. Another way you can do it is notice that the change in assets has to equal the change in liabilities plus the change in equity. And so if we know the change in assets, it increased by 140,000. We could figure out what the change in liabilities is, because we also have the change in equity, which we figured out. So this equals this plus the 230,000. And so we could solve for this X, and the X in this case, it's different than the previous equation. It's going to be the change in liabilities. So when we bring this over, 140 minus 230 would give us negative 90,000. And so the liabilities went down by 90,000. And because we have the beginning liabilities and then we have the change in liabilities, 540,000 minus 90,000 gives us 450,000. So that's another way you could have done it. And then notice that we wouldn't have to get the ending assets, the ending equity. We could just work with the changes. We got this. We got that. The difference between those gives us the change in liabilities. We have the beginning liabilities, change in liabilities. That gives us 450,000. So there's sometimes in questions multiple ways that you can use the flow diagram to get that same answer.